Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. If you're just starting out in real estate investing, well, today's show is for you. And if you're restarting your real estate portfolio in light of what's going on, well, you're going to want to listen as well as we talk about getting started in real estate investing or becoming a better real estate investor today on the Real Estate Guys radio program. Hear ye, hear ye. Registration is now open for the Real Estate Guys 19th Annual Investor Summit. Imagine spending an entire week with like-minded investors, world-class educators, and real-world professionals. Returning this year, our sales legend Tom Hopkins, the editor of the Gold Newsletter Brian London, international real estate developer Beth Clifford, and Jim Rohn's 18-year business partner Kyle Wilson. And joining us live and in person for his 9th Investor Summit, Peter Schiff. Plus, returning for his 9th Investor Summit, best-selling author and the Rich Dad advisor for real estate, Ken McElroy. Plus, lots more to be announced. It all begins June 11th in beautiful Belize. Visit realestateguysradio.com and click the tab that says Summit to reserve your spot. This transformational week is like no conference you've ever attended. Go to realestateguysradio.com and click Summit and make plans to spend a week with the Real Estate Guys, Peter Schiff, Ken McElroy, and an all-star faculty on the 19th Annual Investor Summit. Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. With me, as usual, it is our co-host, financial strategist, Russell Gray.
Hey, Robert.
We love real estate. We love talking about real estate. We love getting people excited about real estate. And today, we took a whole bunch of Ask the Guys questions. That's the shows we do where you send your questions in and we answer them that had to do with one topic. And it's a topic that over the years seems to get a lot of attention. And that is, how do you get started in real estate investing? I mean, we've been doing this show now for almost a quarter of a century, and we've had people come and go and get excited and start their careers. And today, we're kind of proud papas in the fact that we get emails from people that said, I've been listening to your show and this has happened to me and I've got this property and it's all been great. But you got to start somewhere. And I think today we're going to really focus on the person that either has just never invested in real estate. Maybe you're a young person, you're just kind of finding your financial way, or the person that has advocated a little bit. I let my broker take care of it. I let my, friends take care of it. I don't really get my hands dirty. And now you're recognizing that real estate has some cool attributes, or just folks looking to make a switch. We have a lot of people that show up in our lives, sometimes at our live events, who have had a big event, like liquidation. Hey, I sold my company. Now I have a whole bunch of time and a whole bunch of money, and they want to get interested. And the great news about real estate is you can get started at any level.
Yeah. And I think the thing is, I know for me, because you grew up in a real estate home and your dad was an investor and your uncle and all that. For me, it wasn't that way. My dad was a high-tech entrepreneur, a businessman. And so to me, I was always on the outside looking in. I would go take the real estate classes. As a senior in high school, I was taking college-level real estate classes, principles, practices, because my parents got interested in their mid-30s in getting their real estate license. My dad was looking at kind of diversifying his management job in tech to get into the real estate business. So that kind of piqued my interest. And then I noticed that the houses that we had, each time we moved, they sold the house for more than they bought it for. I didn't understand what equity was, but I understood buy low, sell high. And it just seemed like they were making money in real estate. So from an early age, I was intrigued by it, but I didn't have anybody to watch. So I was trying to learn the way a lot of people try to learn, by listening to radio shows or going to seminars or reading books. And that was all helpful, but it wasn't what I thought it would be. I thought it would teach me how to do it. And what it really did is it taught me how to speak the language so that when I got around people who were doing it, I could have conversations and I could understand what they were saying.
Which is important. I mean, we've talked about the analogy of trying to learn to ride a bike by reading a book. But beyond that, imagine you're learning to try to navigate a boat on the water. And you buy a boat and then you watch a YouTube video or read a book. Very, very different than actually getting in the water on a boat, figuring it out, trying to get all that, right? It just takes time to actually do it. So we're going to go through a series of questions, all of which came from listeners. And rather than credit them all, because these questions go back for years, actually, we'll just say a big thanks to everybody that contributed. But the first one, and I thought we got to start with this, is where does the beginner begin? And we have an answer for that. You can say, well, you just have to start kicking around and nosing around and reading, and that's all true. But we think you have to start before that in something called your personal investment philosophy. Now, you may even have to get a little education under your belt before you can do that, but here's the premise of personal investment philosophy. It's that no two investors are exactly alike. Everyone has different resources, different background, different friends. You talked about the fact that I grew up in a real estate family and you didn't. That's a factor. And then risk tolerance, things like that. So personal investment philosophy is, as we like to say, getting in touch with your inner investor, figuring out who you are as a real estate investor before you even own any property.
Yeah, and there's probably 3 resources I would recommend to do that in terms of trying to figure out who you are, what you want out of life, where you're going, what you're willing to do, what you're not willing to do, kind of your mission, vision, values. The goals retreat that we do, the Create Your Future goals retreat we do every year is fantastic for that. Whether you're going to make your money in real estate or in your career, start a business, whatever you're going to do, you're going to build your entire life around desires that you're either consciously aware of and have thought of strategically, or you just default into because you're copying other people you think are happy, or you're living the way you saw your parents live, or whatever. We say don't live by default, live by design.
Exactly.
And so think about what you're doing ahead of time. The other one is...
Hey, before you go to the other one, Russ, I think here's the deal. We're early in the show and we're already promoting one of our events, but I will tell you this has nothing to do with promoting the event and everything to do with the spirit of getting started right. We run into people that have been investing for 10 years and then figured out they hate what they do. They're not enjoying it. They picked the wrong market, the wrong class of property, the wrong team. If you'll just be a little strategic, and I know you're anxious to get started, but if you'll just wait a few moments before you buy that first thing, don't let the money burn a hole in your checking account. Instead, really get clear who you are as a person, what you want out of life. Those big questions makes it so much easier. It's like learning to type. Back in the day, you had to clunk out with a finger and a finger or just one finger on your cell phone.
That's the way I still type.
Once you get pretty good on a cell or on a keyboard, it saves you time. And that's what we're talking about, is saving time, which is the most precious asset you have.
So yeah, like we had that one guy we met in Las Vegas. This guy's making $1 million a year.
Net.
And he's hating every single day of his life. So he just put his ladder against the wrong mountain and climbed it. And he didn't organize the business to suit himself. And where I learned the importance of doing this was in a book called The E-Myth by Michael Gerber. And he calls it your primary aim. The E-Myth is the entrepreneur myth, the myth that you're going to be free, that you're going to be your own boss. It's going to be great. You're going to make a lot of money. And then what you end up doing is living in a jail of your own making because you don't think about what you're doing. And the first most important thing he says you need to think about, your primary aim, is what is it you want the business to do for you? And when we talk to our syndicators who are just getting started in their syndication business, one of the very first things we focus them on, there's a lot of product niches, a lot of markets, a lot of demographics, a lot of ways you can organize your business. If you like managing people and being in an office, if you like flying around and being part of a network, there's a lot of ways you can organize your life. The freedom that you get to be an entrepreneur and investor is to organize things the way you want to. The dark side is you got to figure out what you want and what you don't want. And that's the hard work. The other resource is a book that we're actually doing a book study right now on called Free to Focus, and by Michael Hyatt. And he kind of covers that same basic concept, the idea of what your sweet spot is. Where do you like to work? What kind of work do you like to do? What's intriguing? What's interesting to you? And organizing your life so you have more of that. And here's the thing that kind of ties it all together. I believe there's a myth out there, one that I succumbed to. When I was a young man, 18 years old, I used to proudly proclaim that I would shovel horse crap 8 hours a day for $100,000 a year. Like I would do anything to make money because I falsely believed if I just had enough money, I would be happy. Of course, I ended up doing all kinds of things that I didn't care for because I thought they would make me money. One of them was going into the life insurance business, which is a great business, and I respect people who are in it. I hated it. And even though I was pretty good in business and pretty good in sales, I failed and I couldn't figure out why. And I realized because there's more to life than money. So the 2-step is, I'll go do whatever I can do or whatever I know how to do or whatever's in front of me and make as much money as I can. And then once I have the money, then I will start to live the life I want. That's how marriages, health, all kinds of things go sideways. So don't do that. Start out with figuring out who you are, what you want, what you really want, what you're willing to do, how to organize things in such a way, and then find niches within real estate that fit that lifestyle. And then now all of a sudden it's not work. Robert, when you fly to Belize like every other month or whenever, since the country's opened back up again, That's not work, even though you're down there checking on deals and things that are happening down there. And that's the point. You can live a life where you can find ways to incorporate real estate into your lifestyle, not just a money-making vehicle.
So many people do the two-step. That's what they do. I'm going to do something I dread, but it's going to make me a pile of money, and then I'll be able to invest. This is not for you. Design a life that pays you to live it. So one other resource, and this is one we'll get out quickly and free. It's a little session we did on personal investment philosophy. And it's in our book, but our book's out of print. So this is just an audio. It's a short audio with a little worksheet. And you can get it for free. It'll take you through personal investment philosophy. So it's a great step. It's something tactical, and it's easy. Just send an email to PIP, Personal Investment Philosophy, PIP at realestateguysradio.com. You'll get the audio workshop, and you'll get the worksheet to follow along with. All right, so there's some ideas about where you begin. Who are you? What do you want to accomplish? The next question is, what books and classes should I consider taking? Yes, so a lot of books on real estate, a lot of great classes. Our motto, of course, is education for effective action. So we firmly believe you got to get educated. But one of the guys made a great comment. He goes, I feel like I'm going to be an educational quadriplegic. What he meant by that is I'm going to just be so busy reading, I'm never going to do anything. I'm going to be stuck. So I think we have some ideas about some specific titles for sure, but I think we can also talk in general the kinds of things you need to understand to at least start investing in real estate.
Well, I'll tell you what, I think that you should be looking at what you want to study and where you want to study it by who you're studying with. To me, and of course, we're big proponents of live events, meetup groups, and these days it's a little bit harder, but there are virtual meetups. Whatever you need to do, you are going in to take the content because there's other people there who are interested in what you're interested in, and there are subject matter experts teaching. I would not worry about strategically trying to figure out what you need to learn. I would figure out a lot more about how can I put myself in an environment where there's lots of other people interested in what I'm interested in. When you were growing up and learning your native language and learning the culture and customs and whatever culture you were raised in, most people didn't hand you a manual and give you a bunch of content to study. What you did is you just spent time in the environment and you learned to think the way the people thought, talk the way the people talked, do the things the people did, and you began to understand what the customs and behaviors were. You could see the people that were having success, the people that were having failure, and if you were paying attention, you modeled the people having success and not the people having failure, whether it's a sports team, a music group, a art, whatever it is you were doing as a child. Those principles exactly apply. And you're very smart to be concerned about being so consumed with information overload that you never do anything, because that's the bane of this industry and this business. And there's a lot of marketeers out there that take advantage of that. They know that you're an A student, that you're diligent, that you don't want to lose money, and that you will pay and pay and pay to buy education after education after education, thinking that you need to be a lawyer, a finance professional, a tax expert, a IRA expert, a construction expert, and property management expert, go on and on and on. You need to be conversant in those things, but you will find out in the real world, you don't have to really know that much. You have to be surrounded by a lot of the right people, and you have to know enough to know when to ask for help, and you have to have a psychological profile that lets you ask for help when you don't know what to do.
Such a good point. And you really need to discern. I mean, you're already part of the way there because you're listening to a podcast on real estate. A lot of great podcasts. Don't just listen to us, listen to other folks, especially who have something to say in areas you think you're interested in. Right now, there are enough real estate podcasts that you literally could be listening to one 24 hours a day, 7 days a week. That's too much. See, that's too much. Just be listening, learning, and not doing. So education for effective action says the focus is on the doing. A thing you can do is get around other people. A little harder to do if you're sheltering in place, but still possible. There's all kinds of great virtual meetups and things. I do think we will give you some actual books to consider. The ABCs of Rental Property is the brand new book by Ken McElroy. He's the Rich Dad Advisor for real estate. His previous bestseller, The ABCs of Real Estate Investing, is a great book, but this one on rental property is really a beginner, a primer guide. That's a great book. Obviously, the classic Rich Dad, Poor Dad. If you haven't read that, that's a mindset book. And I think when it comes to real estate, some of what you got to do is get your mind right. It's why I like The Greatest Salesman in the World from Og Mandino and The 5 Major Pieces of the Life Puzzle by Jim Rohn. I'm sure Russ has something to add to that.
I do. I'm going to give maybe topical stuff. I think that the basic things you have to understand a little bit about contract law. I took a contract class in college, just to understand how contracts work and the principles of contracts. I think you have to understand a little bit about asset protection. A lot of times estate planning attorneys and asset protection attorneys will do seminars, and you can go to those or read a book or listen to something. That's kind of boring, but you want to understand it. I think you need to understand a little bit about, if you're going to be a direct real estate investor, you have to understand a little bit about the way houses are put together or properties are put together, the structurally, so that you understand what you're looking at and read a few appraisals. So I know, Robert, you used to teach appraisal in college, and people were taking it not because they wanted to be appraisers or even real estate agents. They were taking it because they wanted to be real estate investors, and they wanted to kind of know, how do I underwrite a property? I say you don't have to know that much, but you have to know enough to know what you're reading, to know when you're being briefed by an inspector or an advisor, to know when you need to ask a question. So you need to understand a little bit about that. I think you need to understand a little bit about tax and the tax benefits of real estate and how that works. And so, Tom Wheelwright's book, Tax-Free Wealth, covers a lot of that stuff. It's not just real estate, but it's one of them. And there's plenty of good things out there that you can learn. But if you break it down into tax, asset protection, the structure, contract law, learn a little bit about markets and market analysis and what makes economies work. So don't not think that economics matters. That was a mistake I made. I got so into the weeds on individual deals, I didn't really underwrite the markets. I didn't understand that. I took your due diligence class, Robert, and you started talking about net in-migration and drivers. And we learned about primary drivers and secondary drivers and tertiary drivers. And it was like, wow, there's a whole lot here in a market. So there are some things you're going to need to learn. But you don't have to be expert in any of them, just conversant. So put those kind of on your wish list. And as you walk around meeting other real estate investors, depending on what niche they're in and the level of success, you might ask them, how did you learn? What type of seminars or books do you read, or what podcasts do you listen to, and see what they say, and just start doing that. It's not a course of study. You don't start out with take this class and then it's a prerequisite for that class. Not like college. You learn it's kind of sloppy, but it's a better way to learn because you'll be seeking answers when you have a problem. And then when you find the answer, it'll mean more to you and it'll cement the knowledge better in your head.
We say if you want great answers, you need to ask great questions. Here's a great question to ask someone you meet who's successful in an area that you're not. Hey, if you could only read one book this year, what book would it be? Or what's the very best book you've read in the last 5 years? And whatever it is, buy a copy. We're talking about getting started in real estate or restarting your post-pandemic portfolio. We've got more when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Don't be like Charlie, who scans the internet for IRA information, often getting bad information from copycats who have no idea what they're doing. You deserve to work with a reputable firm that specializes in one thing, the EQRP. Lucky for you, Congress just made it possible for you to get up to $200,000 out of your current 401k or TSP, so you can invest that money in real estate or even your own business. Even if you're still working, it's possible to get access to all this money tax-free. Whether you're a full-time investor, a doctor, or a government employee, even if you have employees, the EQRP is your secret weapon. You'll never see this strategy in Money Magazine, only here with the Real Estate Guys. Every major accounting firm in America is quietly sharing this strategy with their wealthy clients, helping them get their funds freed from 401k jail. Hi, I'm Damian Lupo, and we have your solution. With the CARES Act expiring soon, this strategy will be gone forever. The EQRP company is ready to help you unleash your retirement funds now. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report today.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Hi, this is Kim Kiyosaki. I'm the author of Rich Woman, and you are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, heard every single weekend on this great radio station and all the time at realestateguysradio.com. If you want to hear a show again, well then be sure you check out the podcast. In fact, subscribe to our podcast at all your favorite purveyors of podcasts. We're talking today about getting started in real estate, which many of you are like, well, I don't need that. You're going to learn something today regardless. Maybe you already have. But these are questions that have come in over the years from folks that are really wondering what they need. And this is a very tactical question that people ask all the time. And most people aren't going to give you an answer, but we are. How much money do you really need to get started in real estate investing?
You really don't need any, but you should have a little bit. The more you have, the better. So if you're serious about being a real estate investor, you should be producing income, living below your means, and stacking up some savings. Concurrent to that, you should be building relationships with people that have means, because you might borrow from them, you may partner with them. I bought my first property with a loan from my wife's grandmother, and that helped. And I had an uncle who mentored me through the transaction. I was signing papers. I didn't even know what it meant. All I knew is I woke up a year and a half later and I made more money on the equity in that property than I made both my wife and I working full time for that year and a half. And I was hooked. I'm like, okay, that was pretty good. So you can have those things operating concurrently.
And I think you probably should. It's the whole thing about learning as you invest. So to get started, if you found a partner and might put some money in a deal without having learned that much about it, you could do that for a few $1,000s. At the same time, about the minimum to get invested in a property would be based on the price of the property, a 20% down payment and closing costs. Now, you know what? We've got a lot of providers in the Real Estate Guys Network that have great rental houses for $60,000, $70,000, $80,000. So take that $70,000 house, $14,000 down payment, some closing cost and reserve. For less than $20,000, you're in a property that provides cash flow. I'm not saying that was what you should do, but in terms of starting on the cheap. But I also want to say something about starting on the cheap. Everyone thinks, well, what's the least amount of money that I can, start with? I think maybe you're thinking about it wrong. We get people, as I mentioned earlier, that come in with a big chunk of money for whatever reason and want to put it to work in real estate. And sometimes they make bigger mistakes than beginners do. You want to watch every dollar, but at the same time, if you think bigger, you can do bigger deals, get around better stuff. And one of the things we like is the idea of raising money, real estate syndication. Once you've done some deals, then you can do some more that way. We'll talk more about that before we're done, but it doesn't take a lot of money. But what it does take is commitment and skin in the game. When somebody comes in with no money and no job and no income and no credit, they probably have no future. You have to have something. It doesn't have to be a big pile of cash. If you have a hustle, if you are interested and you can connect people, there's all kinds of ways to get started. So, acquire some money. Set up your real estate investment fund. Every month, look at your budget, live below your means, skip a few meals out, skip a few lattes, whatever, and then build up a fund. This is not saying live below your means and live in poverty forever so one day you can have a lot of money to leave to your great-grandkids. No, it's just the prudent way to get started. If you're spending more than you're making, it's going to be really hard for you to acquire a real asset like a piece of property. All right, let's see. The next one, how do I take what little knowledge I have, assuming you've been learning and studying and so forth, and turn it into action? That's our motto, education for effective action. So how do you start to do something that matters? I think we've hit on some of that, Russ, in terms of getting around people, looking for meetup groups. When you go to a seminar to learn something, whether it's virtual or in person, you're going for the content. That's true, but you really are going for the room, for the relationships, for people you meet at the break, for those kinds of things. So I think in a lot of ways, you have some knowledge that you can then use as kind of a chip in the game to share with other people.
Yes. So I actually did that. That's how I met you. I took a seminar on how to start a mortgage company. And in the mortgage company, they gave us a marketing tip. And at the end of your Jumpstart Your Real Estate Business seminar, you asked for best ideas and action plans. And you encouraged everybody, to share honestly and share their best ideas that, we weren't going to end up being in competition. It was a very big world and it was a small room of people. And so I went ahead and threw that idea up that I'd paid $2,500 for, and it made an impression on both you and your partner at the time. And it was the beginning of our relationship. So I totally agree with that tactic. I would say this, one of the things that I think I'm pretty good at in life is strategy. That is the idea of figuring out what it is, where you want to go, what you need to get there, what you have to work with, and how do you take what you have to work with to go acquire the things that you need to fill in the blanks to kind of map out the plan and get from point A to point B. So, Rob and I, we've been working together a long time. When we get ready to go do a trade show, we're going to go into an environment where there's going to be people and there's going to be information. We read through everything and we strategically figure out what it is we're trying to acquire out of this experience, and what we go in conscious of the holes we're trying to fill in our knowledge, in our relationship base, in whatever it is we're trying to do. So let's say, for example, I'm a young person and I have a credit score and I have a job, but I don't have any cash and I want to buy a property. Well, then I'm going to need somebody to help me with a down payment. And what I'm going to bring to the party is going to be a credit score. Are there people out there who have money, but for whatever reason don't have good credit? Yeah, I was one of those guys right after 2008. I still had some money, but my credit was destroyed because I'd been through the financial crisis. And so I needed to partner with people who had credit but no money. And we were able to do something called equity share. It was a form of a syndication or a very small partnership. That can be a good way to go. Maybe you're the person who has money and you need to find a young person or somebody with a credit score. It doesn't have to be a young person, but it can be whoever. You may decide, hey, I've got not a good credit score, but I've got a decent credit score. One of the first things I've done with my adult children, as soon as they get to the right age, I put them in front of a mortgage professional and we start a 2-year planning process to organize their finances to be able to buy a property 2 years later. So we don't just go to a seminar and get all hot and bothered about buying a piece of property and run out and make an offer and then run around and try to find the financing. That's not the way to do it. So the way to do it is to understand, where do I want to be 2 years from now? And when I walk in the door to buy that property, what am I going to need to have? I'm going to need to have a down payment. I'm going to need to have documentable income. I'm going to need to have a credit score. I'm going to need to have a certain amount of cash reserves. And I'll just say one last thing on cash reserves real quick, and I'll toss it back to you, Robert. A lot of times people, take every last penny that they have that the lender will allow them to and put it into the deal, and they have nothing in reserve. You have a responsibility, if you choose to be on the landlord side of things, to that tenant. And if something goes wrong in that property, you have a responsibility to change that water heater or fix the roof or whatever it is. And sometimes things come up that are unexpected. So to me, if you can't go into a property, not just with enough money to get the transaction done, without enough money to be a responsible landlord, then you should be looking for a partner, looking for a smaller deal, or wait until you can get in that situation.
Now, Russ, you mentioned this idea of sitting down way ahead of time and planning in terms of being able to qualify. That kind of ties into another question, which is this: what about qualifying for loans? If I can't qualify, am I out of luck? Can I just not invest? And well, the obvious answer is no. You can buy a property for cash, but if you don't have the ability to qualify, you either need to find out a way to partner with someone who does, or you need to have capital. And some of you have more money than credit, so you don't need credit. I will tell you that when you start out investing in things like single family houses and condominiums and duplexes, that your credit's going to be super, super important. I will also tell you it's possible to get a 10 or 15 or $20 million construction or development loan with terrible credit scores, because that's not what those type of lenders look for. I don't mean terrible credit history. I mean the average credit score. Your score is designed to tell other potential lenders a great deal about you in a numeric fashion, and it rewards traditional behavior, things like only getting your credit card up to 20 or 30% and paying it off. Things like having more than one line of credit, but not too many lines of credit. All the things that build good credit. Well, folks that get these big development and construction and those kinds of loans sometimes have all that other stuff wrong. And so they have a consumer credit score that's low, but they can still get a loan. So first of all, Russ hit it on the head. You got to start with the loan. Most people start with the property. I want the property. That's what I want. But way before you even think about a property, you need to get with a mortgage professional who can tell you, A, if you can qualify, and you may be surprised by the answer, either way, and then what do you need to change in order to look really well qualified in the future?
Yeah. So to me, I mean, it starts to me, and maybe because came out of the mortgage business, but I think if you're serious about acquiring real estate, you're going to want to use debt, and some of the best debt there is, especially in residential 1 to 4. One of the most important people on your team is going to be your mortgage professional. So you want to find that guy or gal that's going to be that person. You tell them, here's my goal. I want to buy investment property, and I want to get as many residential 1 to 4 loans as possible. So from the time I do my first loan with you, I want you thinking about the 3rd, 4th, 5th, 10th loan. Okay, so now what you're telling them is, hey, I plan to do some business with you, number one. And number two is that you're setting the expectation of what you need from them. If they think they're that person, then you begin to let them mentor you through preparing a credit profile that they can lend against. And they become like your tax advisor, and you're having regular checkpoints with them so that you're able to manage your borrowing and financial profile to be attractive to lenders. You're not going to know how to do that on your own. You're going to need somebody who's in the space, and it's a changing landscape. It changes all the time. So, those are things that are educational that really don't cost you any money because you're working with people who hope to get your business, and you can give them referrals and certainly your loyalty when you're actually active as a way to compensate them for their time.
If you didn't hear last week's show, we had a great show about private real estate notes, and that could be another thing. If you can't qualify to borrow, maybe you can put a little money out to lend. We're talking about getting started in real estate investing. We've got lots more ideas, and we'll play real estate trivia when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. And now is the time. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2021 Goals Retreat, January 8th to 10th in beautiful Lake Las Vegas, Nevada. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at realestateguysradio.com under events, or call 888-489-7723, extension 18. Get your life back on track, physically, spiritually, and financially. Attend the live in-person 2021 Goals Retreat on the second weekend of the new year. Click Events at realestateguysradio.com to register. This is no dress rehearsal. Live the life you were meant to. Visit realestateguysradio.com or call 888-489-7723, extension 18 today.
Hi, this is Mauricio Raul, the founder and CEO of Premier Law Group, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. If you want to make sure that 2021 is your best year yet, then make plans to join us for Create Your Future, the 2021 Goals Retreat. It takes place live January 8th, 9th, and 10th. Get all the details, realestateguysradio.com. We're talking today about getting started in real estate investing or restarting your portfolio in a post-pandemic world. And before we get back to that discussion, it's time to play Real Estate Trivia. Your chance to win a prize by knowing today's real estate trivia question. When you hear the question and think you know the answer, send your best guess to trivia at realestateguysradio.com. Trivia at realestateguysradio.com includes your name, the answer to the question, and your physical mailing address, because if you're the first that gets it right, you're going to get an awesome new book called Success Habits of Super Achievers, a collection of incredibly motivating stories. That can be yours if you know today's real estate trivia question. Last week of the program, we were talking about arbitrage through private notes, and we asked this: name the most unhappy city in America. Well, according to U.S. Census data, the unhappiest city is Gary, Indiana. Number 2 is Flint, Michigan, followed by New Brunswick, New Jersey, Huntington Park, California, and Patterson, New Jersey. Here's our real estate trivia question for this week. If you were at the southernmost point in the continental U.S., where would you be and what would you see? Yeah, if you were as south as you could be in the 48 states, where are you and what are you looking at? If you know, or you just want to look at a map and guess, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. We'll need your name, the answer to the question, and your physical mailing address. And the first person that gets it right gets this awesome book, Success Habits of Superachievers. That's today's real estate trivia question. We're talking about a critically important topic, and that is getting started or restarted in real estate. Sometimes you get started accidentally. There's the accidental investor, the person who couldn't sell their house, had the ability to qualify for the next one, decided we'll keep it as a rental, and lo and behold, cool things happen like tax deductions and positive cash flow and appreciation. And before you knew it, they're like, I got to do this again, right? So, but other people are a lot more strategic, and that's really what we're addressing today is how can you be strategic? Our motto is education for effective action, but a big thing the real estate guys love to do is collapse time frames. So a lot of the ideas today are not just going to help you be successful, but help you find success sooner. More sooner is better. You can toil around for, years trying to figure it out on your own, or you can take a shortcut. And that brings us to our next question. And again, this is a series of questions that have come over the years from Ask the Guys. This question is, should I start out my investing career with a group or mentor? So there are a lot of places you can go and find structured real estate education. For many years in Northern California, we ran an investor mentoring club that was a club that met once a month. It wasn't a pitch fest. It wasn't a bunch of speakers that were selling stuff like a lot of these clubs are. It was true education, and it was inexpensive, and we built it up from just a handful of people to nearly 1,000 people. It was crazy. And then when the market turned, so did that business, and it was a way to get around other people and get some solid ideas on investing. And I think there's a lot of groups today. There are some that are very informal, meetup groups. They just get together and chat, all the way up to very structured educational courses and mentors who charge a lot of money for what they do.
I think there's a principle that everybody needs to understand, and that is that real estate is not a commodity, meaning that every deal is unique. Every ownership is unique. Every situation is unique. And that means every transaction is negotiable, and there's always a potential to find some meat on the bone. Here's the challenge. If you rely in the technology age on things like, I remember when the multiple listing service was cutting edge, but these marketplaces that get made, the problem is before the property gets into that, however that property gets entered into that database to be available for someone to see, someone has already seen it. You have to understand that basic concept. And that if you can get into relationships with the people that see those deals before they go in to those marketplaces, you have a better opportunity. So I don't care how techie we get in real estate, it will always be a relationship business. And so if the more groups you're in, the more people you're around who are in the deal flow, who are in the flow of money, and you play your cards right in building the relationships and not being a know-it-all and not being a jerk and not being the guy that nobody wants to talk to or spend time with or listen to. If you play your cards right, you can work your way into a position of favor, and then you're on the inside. And I think the key to real estate is going from the outside to the inside. You can't do that in the stock market. That's illegal. But in real estate, not only can you should, and it's really the way to play it. I'm not saying you can't get deals in those other outlets. You're just competing with a lot more people. And when people have a good deal they can't do, they're either going to ask for a partner or they're going to flip it to somebody for a favor. And so if you're one of those people, that's kind of what wholesaling is all about. We may talk about that in just a moment. But when you're in the deal flow and you get a deal you can't do for whatever reason and you flip it to somebody, you can make a little bit of money doing that. But more important, you do somebody a favor and you build a bridge of relationship. And again, this is not what you think it is. If you have kind of an engineer's mentality and you think everything has to balance and everything's going to line up and straight edges and clean lines, it's not that way. It's a very fluid, dynamic thing. It's a community. It's an ecosystem. If you approach it the right way, it's really quite easy to do. If you approach it wrong, it's almost impossible.
We're big fans of getting together, and we like groups, and we like people that are going to lead those conversations and so forth, but choose wisely because there's also a lot of snake oil out there. So ask for references. Make sure that you feel good. You have a gut check about the folks and what they're doing, but you can test drive a lot of stuff too. So it is a way to collapse time frames. times. We're big fans of that. Speaking of which, our next question is about wholesaling. Is wholesaling a good way to start my real estate career? A few weeks back, we had George Gammon on the program, and we said, knowing what you know today, George, what advice would you have for someone getting started? And he said wholesaling.
Yeah.
Wholesaling is a way, and wholesaling is just bird dogging, finding a property that is for sale, not through traditional means typically, and then shopping that to somebody who could really use it, and you kind of get in the middle of that for a little fee or a percentage or a partnership. A lot of ways to do it. But the reason George said that isn't because he thinks wholesaling is the greatest thing, although many people do. We've had some guests like that. That's what they do, and they love it. But that it's just a really good way for you to get introduced to a lot of elements of investing in real estate.
Yeah, it does two primary things. Number one, it teaches you how to recognize value quickly because you're looking around the marketplace and you're looking for value. When you recognize value, you test your ability to recognize value when you offer it to a more seasoned investor who's able to close on the transaction. And if they see value, then you know, okay, I'm starting to see things. So they're taking the long-term risk while you're learning. And so that's really good. The second thing is it teaches you how to get in the deal flow because wherever you're finding these deals, however you're prospecting to get the deals into your pipeline so that you can then flip them to other investors, you're developing those relationships on the intake side. On the back side, you're developing a relationship with affluent people who like the deal flow from you because a lot of people have money and they don't want to do that work. That's why that's a great place to start. And of course, down the road, those people, those investors on the outtake side are going to be potential partners for you if you decide to get into the syndication business, people that you could potentially sell inventory to. Maybe you, instead of wholesaling a property, you buy it, you rehab it and flip it to them. You make maybe a little bit more money than you would if you were wholesaling. So having that network on both sides, deal flow and money flow, that's the essence of being in this business. Eventually, maybe you have all your own money and you don't need anybody else and you're so big that you're gravitational pull and everybody brings their deal to you first before anybody else. But the vast majority of us are never going to be that person. We're pretty close because of our positioning, but it's much better to build those relationships front and back and find ways to add value to both demographics. And when you put yourself in the flow of money and deals, some of it's going to get on you.
In real estate brokerage, we say list to live, meaning that when there's a transaction, there's always a listing broker. There might be a whole bunch of brokers or agents representing buyers, but if you list, if you control the deal, you're going to always be part of the transaction. And that's a thing a wholesaler can do. And it also can help you identify great buys. Now, our next question is interesting. Will getting a real estate license help or hurt me? The short answer is yes, it will help or hurt you. So first of all, getting a real estate license, there's reasons you'd want to do that. That's the thing to examine. I will say this, I have some energy on it, which I inherited. I'll tell you about that in a minute. And that is that if you are getting a real estate license so that you can save the commission, that's not a great idea. Much better to have third-party arm's length representation, and you're not going to get emotional, and you're going to let someone who can negotiate well and knows the market. That's not the reason. If you want to get educated, it can be an excellent education. And if you want to do something that requires a real estate license on down the road, then for sure. So it just depends on you. One of the advantages to having a real estate license is that you are pretty much assured, check with your tax professional, of being a full-time real estate professional, which has some tax benefits, which we won't get into today, but we do discuss that in our Tax Talk series on YouTube. Got a great series of interviews we've done with folks and some case studies, and the first one out of the gate was with Tom Wheelwright. All you have to do is send an email to taxtalk@realestateguysradio.com. We'll direct you to that, taxtalk@realestateguysradio.com. When Russ was talking about the education you need at least a cursory understanding of tax, and real estate comes with some great tax benefits. Now, there is some downside to getting a license. First of all, I see people that get lost in the minutia. They had to take another course and another course, and they want a designation, they want another designation, and all that is just time and money and study when you could instead be buying property. But the other thing is you have to understand that when something goes wrong, you will be held to a higher standard if you're licensed. It's not enough reason to not get licensed. In my case, I was licensed for 18 years and I decided not to renew my license because nothing I do today requires a real estate license, and it does carry a liability. So it really is a personal thing. You know, my dad, Bob Helms, wrote a book called Be in the Top 1%, which is all about real estate agents learning to get versed and help out investors in the real estate investment game. So that could be a resource if you're thinking about it, because if you're going to be an agent, you might as well work with investors that buy 3 or 4 properties a year instead of homeowners that buy 1 property every 5 to 7 years.
Yeah, the 2 main reasons in summary to do it is number 1, to get the tax breaks, and number 2, to earn commissions. And so if neither of those 2 things are interesting to you, being under the jurisdiction of whatever department of real estate is probably not worth it. Those are really the only 2 reasons to do it. The education you get to pass a license is a little bit useful, but not really. Your brokers that you hire will be able to bring you all that and more with the help of your attorneys. So it's not about education. It's really just about, do you want the tax breaks or do you want to earn the commission?
We're talking about getting started in real estate investing. We have some closing thoughts when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
When it comes to successful rental property investing, it pays to be picky. Pick the right markets, pick profitable properties, and pick great property management. That's easier said than done, but we've got great news. Terry Kerr and his rockstar team at Mid-South Homebuyers are going strong in Memphis, Tennessee, and Little Rock, Arkansas, too. So for a top-notch turnkey single-family home rental property, whether you're a new investor or have a large portfolio already, pick Terry Kerr and Mid-South for a truly A-plus investing experience. To learn more, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com.
Hey, I'm Jim Grant. I'm the editor and indeed the founder of Grant's Interest Rate Observer, and you, ladies and gentlemen, you lucky people, are listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Glad that you're here. Look forward to seeing many of you the weekend of the 8th, 9th, and 10th of January. It is our 2021 Goals Retreat called Create Your Future. If you lack clarity at all, if you're getting started in real estate and you really want to get a correct and awesome start, not only will you get in touch with your inner investor in a big way, but you'll get to meet lots of cool real estate investors too. All the details on our website at realestateguysradio.com under events. We've collected a bunch of questions over the years that all come into the category of how do I get started in real estate investing, going through some key points here. Also a few shows in the archives about this topic. So if you are getting started, welcome aboard. Sometimes the Real Estate Guys, since we talk about broader picture economics and other investment classes, sometimes people think, oh, well, we're too sophisticated or we speak over people's head. That is not our intent at all. In fact, to Russ's point earlier, you start getting around the language of real estate and people that are doing deals and all, and it can be amazing. So a couple more questions here. This one is now a good time to start? Of all the times to invest in real estate, is now a good time to start? Now, ironically, this question came in about 2.5 years ago. So I'll say 2.5 years ago, yes, that was a good time to start. What about today? Well, things have changed a ton. We've actually done quite a few shows this year about this topic, including one just a couple weeks back with Ken McElroy. Is it too late to get investing in real estate? And I think the answer is it's never too late. It's like, when's the best time to plant a tree? 20 years ago. When's the second best time? Right now.
Yeah, I really think if you believe that real estate as something that is going to be valuable, in demand, 5 years, 10 years, 20 years, 30 years, 50 years from now, the question isn't about whether now is the time. The question is how much real estate do you want to own in the future? And if you want to own more, then the sooner you can start, the better. And since now is the earliest you can be, yes, now is the time. Now, does that mean that you're going to have to swim through a lot more bad deals to find a good deal in certain markets? Absolutely. But again, the real estate is not a commodity. It's not a perfect market. You're going to find off-market deals. You're going to find motivated sellers. You're going to find distressed situations. You're going to find all kinds of things. Now, you could make the argument because of what's going on in the economy, there's a whole lot of distress coming, and it's a great time to start. You could make the argument that there's so much stimulus been pumped into the economy and interest rates are so low, every property's in a bubble and I can't get a deal. That's true. But if you're out there building the relationships when that bubble bursts, you're going to recognize a deal when you see it. Remember, it's not the price that makes something the deal, it's the value. And what you're purchasing when you buy real estate is a stream of income. If you can structure financing or whatever in such a way that you can manage that stream of income for a long period of time, 5 years, 10 years, 15 years, 15 years from now, pretty much whatever happens between now and then, history says you're going to be happy you own more real estate 15 years from now or 10 years from now than you do today. So if you see a deal in front of you that pencils, then now is the time. If you don't, then now is not the time. And that's true whatever is going on in the external market because every deal is unique.
The other part of this is it seems like buying at the bottom of the market would make all the sense in the world. But having been through a couple of those times, nobody knows it's the bottom of the market. Everyone's afraid it's going down further, and it's so uncertain. I was in a competitive bid for a property years ago, and we were at a pretty frothy market, and there was some concern. We were at the top, and there were all these bids, and so the property was listed for $125,000. I ended up paying $132 and change. I was the winning bid. I paid too much. It was over the top. I sold that property a few years later for almost $300,000. It just sold again recently for $1.4 million. I could have decided back then, $132,500, that's just too much. I'm not going to pay a penny over $130,000, and somebody else would have got the property. So the lesson is you don't just jump on any property at any time, but there's always an opportunity. Even in the last downturn, we had fun at a lot of the places we were asked to speak to talk about, the crashing of the market. And in every case, when a market goes down, it's not every single property. It's not every single market. There was one MSA in the U.S. that never went down during all of 2007, 8, or 9. It continued to go up in value. So there's always a place. It's like that internationally. We're big fans of investing outside just one city or state or country once you've got some experience under your belt, because it's a way to diversify. So the last question is, what else should I be asking? And I think that's a great question. What else should I be asking? Because there's this whole thing about you don't know what you don't know. And none of us know it all. When Russ and I get the great opportunity to hang around super smart guys, that's when we've asked those kinds of questions. Like we find out things we weren't thinking about, wouldn't have thought to ask, and those can be some of the most valuable lessons.
Yeah, I think to me, there's one thing I wanted to toss in on that last little topic, and I'll say it this way. Underwriting is more important than market timing. A lot of times we listen to the stock people and they all talk about timing the market. Is it a good time to buy or not? Because they're dealing with these big herd moves. But underwriting an individual deal is so much more important. If it makes sense, and it makes sense. As far as, kind of what you don't know to ask, I think just keep it simple. To me, if you get around the right people, that's number one. Number two, you go to work on your what you have to work with. And primarily that's going to be your credit and your financials, and start working with a mortgage professional and a tax professional to make sure that you create the most amount of available income to pledge to payments that you can qualify for loans. And then start understanding what makes markets tick. Where do jobs come from? Who are the tenants? Get your mind around those components. Well, I'll end with this. A lot of people go out and they buy a property, and then they hire a property manager, and then they take a look at the market, and then through all the mistakes and pain, they develop their personal investment philosophy. You'll turn that on its head, and you will start with your personal investment philosophy. So we already talked about that. So if you send an email to pip@realestateguysradio.com, you'll get an audio course and a worksheet you can work through on that. But the point is you figure out a market, which is going to be a geographic market, a product niche, and a demographic that is likely to produce the kind of result and give you what you want in your personal investment philosophy. Then you build a team that is expert in that particular niche, and they help you find the properties that you want. And most of the time, one of the most important people, the unsung hero of the group, is going to be your property manager. So if you just take that last little bit and you build your whole action plan around just that, getting around the right people, figuring out your personal investment philosophy, picking your markets, building a team, and working on your personal financials, you're probably going to have great success. It doesn't have to be much more complicated than that.
We wish you great luck in your real estate career and lots of great information coming on down the line in the new year from the Real Estate Guys. So if you haven't yet, subscribe to the program. Big thanks to all the listeners who over the years have submitted the various versions of those questions. It's never too late to get started, and a year from now, you will have wished you started today. Until next week, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys radio show.